Hi, this is Zak Mir with the Easter edition of the Bulletin Board Heroes here at Vox Markets. It's Saturday, the 16th of April. Starting off with Ascent Resources, which looks like as though, just for a change, it's doing everything right. We've got that bullish divergence line there. We've got the gap close buy signal that we had back in the early part of last month. We had the sideways shuffle across a rising 50-day moving average, and then the trend line break. So that's basically everything that you could possibly want in that setup there. Current situation, we've just broken out of a bull flag, which is a very tight one as well, which is another plus, in fact, and closed the week last week above the 200-day moving average around 4.2 pence. The longer we stay above the 4 pence area and the floor of that flag, actually 3.9 pence, the greater the chance the shares have got to get up to 8 pence, which seems rather optimistic, but with all those positive setup points, that could be seen over the next 1 to 2 months and perhaps even sooner. I suppose the best thing here is that rising 50-day moving average over the past week or so. Lots of speculation in Audioboom, and just for a change, the speculation has been matched by a steady rise in the share price. That gives us confidence that even, whatever the scenario, where the shares will still go up anyway. We got the results out of the way as well, and the shares managed to recover from another test of the 50-day moving average around 1880 after that. Broken the initial April resistance at 2060 and mid-March resistance, neckline resistance around the same area as well. Above that, looking for the top of that rising trend channel from September at £27. That's an area we've been looking for quite some time, but slow build there and still looks very encouraging. On to Chariot, which has been another stock which has blown the lights out over the recent past. Not surprising, obviously, given the oil price, but not all oilers have rallied. Here we're looking for, well, we've had various targets here. The first one was around 13, the next one around 18, and the final one here was up to 26 pence, which looks as though it could be seen sometime next week. Beautiful pattern there with that symmetrical triangle, sort of like a bull flag triangle, if you can call it that. And the longer we stay above the 21 pence area, i.e. Friday's support, the greater the chance of 26 being seen. If you're looking for yet another target to the upside, probably that could be along the lines of the line I'm just trying to draw now, which is heading for 30 pence plus. In fact, much more than that. In fact, up towards the sort of the high 30s, 37, 38. Maybe that's a 1 to 2 month target. But as I said, the upside is certainly in place while we hold above the 20 pence zone, and we've got the unfilled gap to the upside through the resistance, adding to the fact that this looks like a very strong chart indeed. Itaconix is a stock which has had its moments, both negative and positive over the recent past, but it looks like it's finally coming out of that 1 year pullback that we've had, just breaking that line of resistance and the 50-day moving average at 4.2 pence. You can also see that the 50-day line is now starting to rise, which is one of our favoured signals, and that should mean that above 4.2 we at least head up towards the 200-day moving average and February resistance at 6 pence. Best case scenario target at the moment, maybe as soon as the end of next month, up to 10 pence at that November resistance line. But the timing on that maybe not quite so sure, as just the fact that it looks as though the shares are bottoming out there and have started their recovery. On to HeliumOne, which is one of last year's favourites. It seems to be rehabilitating itself quite well now. First start of the recovery was back in January with a break of the resistance line there from back in August, so that was around 7 pence. We peaked around the August, sort of the last resistance in August, around 15 pence. Taken a while to regroup, but looks like a sort of extended base here for the shares, depending on where you draw the resistance line there. At the beginning of this month, around 8.5 pence, started another bullish phase. Again, we've got that shuffle along the 50-day moving average, very important signal, that one, and broken the initial April high around 10.75 pence. Above that, looking for a retest of 15 pence and perhaps much more after that. So it looks like a decent positive change there for HeliumOne on the technical basis. On to Hemogenics, which has been also trying to base out over the recent past. We had that dip below 1.3 pence, which you could say was the bear trap dip earlier last month. A lot of shares had that. Now we've got a sideways shuffle along the 50-day moving average without actually touching it, which is a positive. Probably to see the 50-day line start to rise next week, and that should be enough to get the shares up towards 2.5 pence, which is basically the post-May resistance area. But we've had 1 or 2 spikes that are higher than that, but 2.5 pence looks to be on the cards while we hold above the 50-day line around 1.48. So a better looking picture there. at Hemo. On to Kodal, which is a stock which has its fans, and maybe they can start cheering on their stock now. We've got the 50-day line just starting to rise now. We've broken through the 200-day moving average at the end of the week, 0.32. So 0.4 looks pretty well nailed on for the shares over the next couple of weeks. And who knows, after that we could see a greater recovery. But at least while we're above the 0.3 area, looking for 0.4 on Kodal over the near term. Mirriad is next, and here we've got another recovery situation. Quite a few of these now, and almost similar patterns as well. Here you can see that we've got the a U-shaped reversal for these shares and a rising 50-day moving average. Just need to break that initial April peak around 23 pence. So if we can do that, then we should be into the 30 to 35 pence zone for the stock. Obviously, we did have a full storm recovery for the shares. It was a sort of a break of that resistance line there back, April resistance line from last year, back in October, and then we petered out. But this, with that U-shaped pattern that we got at the moment, it looks rather more encouraging, especially when you add in that resistance line there, which the stock has clearly seen and is pushing higher on. So 30 to 35 pence, while we hold above the 20 pence area for Mirriad. Moving along to a stock which I sort of regarded as a bit of a binary bet. Maybe it still is, but here we're just looking at the technicals, and slightly messy, I suppose, the way I've drawn it, but we've got a rising trend channel there from the beginning of last month. That channel heading towards 5.5 pence, and depending how fussy you are on money management, either above the initial March peak at 3 pence, or if you can risk down to around the 2.5 pence area, you could get that 5.5 pence target. But I suppose the main message here is that with that unfilled gap to the upside, it looks as though there's been a change in the perception of the stock, and therefore we're looking for the stock to push higher, even though the fundamentals may be slightly questionable at the moment. Time frame on 5.5 pence, maybe by the end of next month. On to Poolbeg, which keeps pumping out the positive fundamentals. Just seeing how much we need of that to get the share price higher again. We've had a decent base for the stock after that bear trap below 5.5 pence, like 2-3 days below that level. And then we had a gap close by signal. You see that final exhaustion gap to the downside. Then we closed above that. So that was a turnaround signal, a decent one at 5.5 pence. All we're waiting for now, with a gap through the 50-day moving average that we had at the end of last week, is an end of day close above that September resistance line. If we can get that, then we're looking up towards 9 to 9.5 pence by the end of next month, which is the area of the 200-day moving average, and also post-December resistance for the shares. It would be surprising to see any weakness now back below 5 3/4 after the gap higher that we've had at the end of the week. On to Quetzal, which seems to be reviving itself as well. Here we've got a nice bullish divergence line there, which has been in place since October. We had a brief dip, 2-day dip below the old October support, 3.3 pence, let's call that, so a bear trap. Trend line break as well, and then that sideways shuffle above the 50-day moving average that we've had over the course of April. A nice weekly close as well last week above the initial April resistance of 4.5 pence, which gives us confidence. All of that gives us confidence that the shares can hit 7 pence as soon as the end of next month, and that's valid at least while we hold above the 4 pence area. Just a couple of stocks to go now. First is Sound Energy, which has managed to consolidate well over the course of the last week. Again, we've got the 50 and 200-day moving averages rising. The 50-day line rising near the lows is generally a good sign, and above that, around 1 3/4 pence. We're looking for 3.2 pence at the top of that broadening triangle from basically this time last year, so 3.2 pence may be on the cards by the end of next month. If you're cautious, obviously wait for 2.5 pence to break, but that might be giving away a little bit too much of the upside. Finishing off with the Tirupati, which finally looks to be catching up with the general positivity towards graph height, and here you can see that the shares have broken a line of resistance there from back in, well, basically the start of the year at 69 pence. Above that, we're looking for at least the 200-day line around 90 pence over the next 2 to 4 weeks, and maybe by the end of next month as high as £1.10. The reason for the optimism is that multi-tested uptrend line, bullish divergence line, in fact, in the RSI window from back in November. That's been such a long feature that one would expect the positive momentum to finally kick in. That's it for me today. More updates during the week.